Yo guys, what is going on? Welcome back to the channel. In today's video, I'm actually a little bit sick. I'm currently literally having so many of these little vitamin C things and drinking a lot of water to try and get better. But I'm gonna break down a trade that made me $20,000, actually $19,890 on, what was this? Thursday. So I'm gonna break this down for you. This was on a challenge account with ACG. It was so close to being blown, and one trade got it back to break even. $20,000 is crazy. That was 10% in one trade, which brought my account, like I said, back from literally blown to break even. So it shows you that you can do this. You just have to lock in. Not even lock in, what am I talking about? You just need to focus on the best setups. And that's what I'll teach you how to do in this video today. It's gonna be very, very simple, very straight to the point. Make sure to watch the whole thing. I'm actually very sick, so I don't really want to do loads of editing on this. I'm probably just gonna literally keep it so raw and so simple. But yeah, enjoy the video guys and watch how I made $20,000 on one trade. Let's go on the charts. All right guys, so let's head over to TradingView, and remember guys, this trade made me $20,000. So it was a bit of over risking, 100%, right? Of course, to make $20,000 in a trade is not really what you would normally do or see. However, my approach to challenge accounts, which I will explain to you in this video, is you have to be risky, right? I like to risk normally around 2% per trade, and it means that in one trade, I can pass the account. First of all, risking a good amount, right? Not under risking, but also not over risking. Don't like risk 5% on a trade. But then most importantly, you have to make sure that you're waiting for those A-class setups before you take the trade. So this is the trade that we took. Okay, super simple trade. And I'm going to explain exactly why I took it, how I knew to take it, the higher time frame for this trade as well. Everything about this trade is honestly perfect. Like, this to me was a perfect trade. The only thing I would have preferred is a sweep evasion low and a tap into this demand zone here and then a reversal. But unfortunately that didn't happen. However, I was still able to get a trade during New York session, and I'll break down this exact entry model and everything for you guys in this video. So trust me, you're gonna wanna watch the whole thing. All right guys, so the first thing we're gonna do is have a look on the weekly time frame on DXY. DXY is so important to understand. Oh, I just realized I'm not even in a shirt. So apologies for that. Like, this video literally is just really just simple. So I hope you guys enjoy it. But yeah, like, DXY is the most important thing for you to understand when it comes to actually getting that confirmation for GU to take the trade. So very important. And what we can see here on the weekly is that we had this, this essentially is what's known as a reprice of the previous weekly candle. So this candle here was super bearish, as you can see, and it essentially left this big gap in price from here, right? It's not a fair value gap as the next candle hasn't closed, but it is a gap which what you can expect to happen from this gap is essentially something like this, where we come up, we fill the remainder of this gap here, and we touch this wick here, essentially, and then we start to reverse from here. That's basically what that is called. And I don't actually know the specific term for it. I think it's called a weekly reprice. But essentially that was the reasoning for this trade as well on the higher time frame. So let me go into a bit more detail now and explain exactly why this happened and exactly how you could have made money from this. So let's go to the daily, right? On the daily time frame, okay, like I mentioned, we were looking for price to come and fill this line right here, okay? Now, it's very important, first of all, that we wait for the perfect opportunity to take the trade. Now, I only took one trade this week, and that one trade made me $20,000 on that account. So how did I do this? How did I know to wait for this exact day to take the trade? It's very simple. And to do that, I'm gonna go and explain some basics for you guys, okay? Some market structure basics. This right here is gonna show you how candles form. And bear with me, because this is very important to understand. Okay, a candle is going to open like this. So this is the opening price of a candle. Now, if you're bullish, you expect price to obviously go higher, right? However, every candle has to have a low before the high is placed. So normally what happens is if the candle is bullish, it's going to go lower first, then it's going to go higher, and then it's going to close somewhere like this. That's essentially what a bullish candle looks like. And then on the opposite side of things, a bearish candle would basically look like this. You open here, you start by going higher first, then you go lower, and then you close somewhere like this. That is what a bearish candle looks like. And this is the most important thing to understand when it comes to higher time frame. Understanding that candles look like this, and when you can understand that candles look like this, we can now use this in our trading to have an excellent understanding of the higher time frame. So actually, let me go ahead and show you a bearish example, because obviously I was expecting DXY to go lower, which means we're expecting the high to be formed first and then the move down and then the close somewhere like this. So this is what we're looking for, right? And if you actually go ahead and drag this into here, that's literally what happened, right? You guys will see, and I can literally show you this, it's perfect, right? Oh, I actually should have made this a bit smaller. But you see here, right, what happened is we came up to fill this gap and then drop lower and then close like this. So I did make this way too big, but you can still see the same sort of exact thing happen, right? We opened here, we came up to here, we came down to here, and then we closed up here, right? So this is exactly what we saw last week, right? Exactly what I said, what I was looking for originally, right? Something like this. And this is your typical pattern for a weekly candle. And the weekly candle is obviously consistent of 5 daily candles. Now, if we break this down even further, right? We know we were looking for this gap here to be filled, this line here to be filled, basically. So after this point, yes, we know that. And yes, we know that we're looking for something like this sort of pattern to play out. You need to understand, most importantly, right, that the high or the low, or sorry, the high of the week on this occasion, so the highest point the market is going to go to, is likely to be on a Tuesday or a Wednesday. That's just the facts. That's just how the market normally is. There normally will be a high or low formed on a Tuesday or a Wednesday, and that's when you want to be able to take the trade. So what we can see here, by the way, is that this was on a Wednesday. This here not only filled this whole gap, rejected from it perfectly, but it was also on a Wednesday, which I know through my own trading experience and education, that normally that will be the high of the week if you are bearish, okay? So just based off the higher time frame alone, just to go over everything again, we were looking for a fill of this weekly gap here, right? Which we saw, so that's the first thing. Second thing, we saw that fill and then we saw the rejection, and the rejection was on Wednesday. So guess what this means? This means it's so likely that this is playing out right here, okay? Because we've come higher first, we've rejected from a point of interest, and that happens to be on a Wednesday. So guess what? After that's happened, we're likely to see the move lower, and that's exactly what I traded on Thursday. I traded this move lower on Thursday, and it's because I knew about all of that stuff that I said before, okay? Now, this is very advanced stuff, and this is stuff that, to be honest, no one really is gonna teach you for free, I'll be totally honest. So that's why you should subscribe to me. And this is the sort of education you will get inside of my community, right? You're gonna get in detail education like this every single day on my live trading sessions, explaining these concepts to you so you can actually take trades like this, okay? Because as you can see, look at that candle on Thursday. I was able to trade this candle because I understand these things. And to go one step further, where we can look for a price to target is gonna be this low down here. So that's obviously the target. This was actually the previous week low, which has a load of liquidity resting below it. And as a result of that, we can expect that this is gonna be completely taken out. And that's exactly what happened. Now, by the way, I'm not just saying this after I took the trade. On the Sunday before this even happened, before the markets even opened on Monday, right? I said this exact thing would happen on my Sunday analysis call with my community. And that's because I know what's gonna happen. My higher time frame analysis is honestly so good to the point where I can predict stuff like this. And I don't think I can show you the video because I just don't think I have it anymore. I might be able to show you it, but the fact is I call this exactly and it happened perfectly. So it is possible to do this, guys. You just have to have a very good understanding of everything. So now, guys, I'm gonna go and show you what happened on GU at the same time of this happening here on Thursday on DXY, because obviously you need to be able to actually take the trade, which means you have to be on GU as well as DXY. So what we saw here on GU on Thursday, okay? We had this gap down here, this fair value gap down here, and what did we see happen on, let's go to Wednesday. So on Wednesday, you can see here, We came down, we filled this fair value gap, and then we rejected from it perfectly. Now guys, heading over to GU, we can see that the inverse happened on GU compared to DXY, because if you don't know, DXY and GU do the inverse of each other. So if we are expecting DXY to go lower, right, then we're expecting GU to go higher, and that's just how they go. You're looking for the inverse of each other on DXY compared to GU. All right guys, so looking here on GU, you can see that we basically did the inverse of what happened on DXY. We had this fair value gap down here, we filled this fair value gap on Wednesday, and then we started to reject from here on Wednesday. Now, this lines up so perfectly with what we saw on DXY, because if we go back to DXY quickly, we saw this rejection here on Wednesday from the fill of this gap, which made sense for it to move lower, exactly. So that means, because they do the inverse, when I saw that on DXY and I saw this on GU, rejecting from this gap, guess what? It made sense to move higher. So that's what I did. On Thursday, I was looking for buys, and now if we go down to the 15-minute time frame, I'm going to show you how I got the entry on this based off that higher time frame analysis, which, by the way, I hope makes sense to you, because that is the reasoning for my trades. I trade once a week normally based off higher time frame analysis, and then the entry is the easiest thing to do, right? Once you know the higher time frame, you basically know where the market's going to go. From that point, all you need to do is fill in the gaps, the missing pieces of the puzzle, find your entry, and as long as your higher time frame analysis is good and correct, which will normally be, because higher time frame, if you understand it like I do, it's definitely quite easy to analyze. Like honestly, higher time frame for me now is so good, to the point where almost every week I am correct about my higher time frame analysis, and my community will back that up for me in the comments. So yeah, but anyway, let's continue playing out price. So for those of you who know my strategy, you will know that I would normally wait for Asian low to be swept if I'm looking for buys, okay? Which totally is what I was doing originally, right? I was waiting for Asian low here to get swept, and I was looking for a reaction from this demand zone down here, okay? Like this. Now, here's the thing. Because my higher time frame bias on GE was so bullish and I was so confident on this, basically I ended up trading without seeing Asian low swept, which is not something I normally do or really recommend. However, as you'll see, it did make a lot of sense, okay? And by the way, I'm going to quickly draw out the previous day high up here, which was my target for this trade for today, right? I expected price to go higher to target the previous day high, because there's loads of liquidity above the previous day high from yesterday. So that was my target. Now, let's look for our entry. So basically, I was on the charts here. I was waiting for this demand zone to be hit, okay? Now, we saw this. Very clear indication that we are heading a lot higher because of this volume coming in right here, okay? So at this point, I was sort of thinking, if we are so bullish, which I do think we are going to be really bullish today, are we actually going to go all the way down here and then go all the way back up? Probably not, because that is just too much of a move to expect on one single day. So now I didn't expect we were going to come down into here, to be honest. So I basically stopped looking for this zone, and I now look for a New York continuation model, which is something which is new, right? I don't really trade like this too much. However, when it plays out, and it does very well. So what I did was I then looked to mark out this demand zone down here, okay? So if I play out price, you'll see what happens. We eventually do come into it. And now once we saw that this was rejecting from the 15-minute demand zone, I went to the 1 minute, and as you guys will see, we had a 1 minute change of character when we broke past this high right here. This is the high here that caused this low. So when we broke past it, that's the change of character. That's where you look to take an entry. My entry was probably somewhere up here with my stop loss below this low. And then, like I said, guys, my target was the previous day high all the way up here, right? Which would have been about 1 to 5. Now, as you will see, unfortunately, this trade did hit me out at basically break even for a very small loss, actually, I think. But anyway, that was basically break even trade, okay, on this one. And then what happened is I then re-entered again once we took out this low right here, okay? Because I was so confident on my higher time frame for this trade. And yes, I was stopped out, but that didn't make me think that we were totally wrong, right? Because all it was in my head was just a sweep of liquidity. It was just you know, a loss. That's just what happens. Sometimes you're going to have a sweep of liquidity on the first trade you take, which is a loss, of course. And then you got to re-enter. You got to have the confidence in your strategy to be able to re-enter, which is what I did. So on the 1 minute, yet again, somewhere down here, I would have got my entry. I don't know where it was. Let's assume something like this. In fact, I'll go and actually show you the exact entry I got. It says 028. So 028 is actually all the way down here, right? And I'm gonna prove this to you by showing you on my screen. You can see it's the bottom ones, right? See how it says 028, one of the bottom ones. That's basically my first entry. And then I got another entry at 8.1. So 8.1 is all the way up here. So I basically scaled in again, right up here. And then as you will see, guys, this went and smashed my take profits and made me 20K. So yeah, very, very good trade. And you will see, guys, that this does go and hit my TPs on both of those positions. My stop loss on this one was below this low here, I think, or actually it was maybe a little bit bigger breathing room. Whatever it was, I don't know, but yeah, I ended up going and hit my TPs. So as you can see, that's the trade that I took, guys. That's the trade that made me 20K on that ACG account. I bought it from drawdown all the way back into break even, actually a bit of profit. I think that account is now on 2.2K profit. So that just shows you guys so many things, right? It shows you the importance of higher time frame, the importance of understanding a good strategy, having confidence to re-enter a trade, having confidence that if your account is in drawdown, it's not always lost. You can always recover it if you are patient enough to wait for a class setup like this one today. And that's just what you need to do. When it comes to trading, guys, you have to have the patience to wait for these setups, because when they do come around, that's when you're gonna make the most amount of money on these trades. The key to trading is to trade less. I took one trade this week and it made me 20K on the account. That is, bro, that's something that everyone needs to get in their head. Less is more in trading. Stop trading every day. Stop trading setups that aren't good. Stop trading against the higher time frame. Be patient and your trading will improve. Okay? I hope you guys enjoyed the video. If you're looking to learn my strategy and actually get something like this shown to you on the charts live every single day, then hit the first link below in the description and you guys can basically apply for my community using that link. And other than that, guys, I'll see you guys on the next one. Thanks for watching. Peace.